Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, you know us by now. We're talking today about a Dividend King that's gotten absolutely crushed in 2022. The question is this stock trading its Black Friday, Cyber Monday prices, or is this a stock that we are just staying away from altogether? Everybody hang around. We're going to run them through our Dividend Diplomats, Dividend Stock Screener, and talk about the major news impacting this Dividend King today.
Guys, you listen up, brothers. Smash that subscribe button. Give Bert the Hurt and I a nice thumbs up. We're trying to get to 25,000 subs. It only takes a second. Click it. We dig it. We love it. Thank you, guys. We appreciate the support. Yeah, Bert, Dividend King getting absolutely pummeled. Rock bottom, stone cold stun, Triple H pedigreed, the Shane O'Mac flying elbow drop from a turnbuckle onto this dividend stock that's down 30% this year because they're in retail and they're getting pummeled.
Yeah, I really wish I had enough room here in this thing to do the Shane O'Mac. I can't get it though. Yeah, there you go, Lanny. That's what we needed to see. Show me the money. Well, see, we're showing this stock. Yeah. All right, everybody. The company we're talking about today, Target, ticker symbol TGT. Of course, they're going to be a huge player in Black Friday, in Cyber Monday, especially as we gear up for the holiday season. And you hit it on the head, Lanny. This stock's been getting pummeled. They've been in the news because Target has been getting crushed by inflation. They've been getting crushed by excess inventories, and that's finally starting to weigh here on the company's earnings. As you can see in their last quarterly earnings, they announced that profit fell by 50% as they were trying to get rid of inventory. Slows were sailing down, and the impact of inflation started to feel. And that's important here because Target's competing with Walmart. They're competing with Amazon. They're in retail. The margins are low to begin with inventory. So there isn't a lot of room for error, especially in this sector.
Not a lot of room for error. Obviously, they missed the earnings and revenue beat this last round. Earnings came in at about $1.54 versus $2.13 expected, 26.5 billion, actually versus 26 and a third, expected. They actually beat on revenue, but totally got their legs taken out on the earnings, more than likely because they had to reduce prices, to get some old inventory out.
And the factor here that's impacting Target that we're going to start seeing flow through other companies as well is it's not just inflation hitting products that they're purchasing and hitting their income statement directly. It's also, unfortunately, working through the consumers now too, as inflation starts to hit family budgets and inflation starts to really take effect into everyday household. More households are fighting what do they need versus what they want. And that's probably going to really impact a lot of these retailers in the holiday season as purchases are down, as there's not as much cash, the savings accounts aren't as high as they are in this year. And that sucks for the consumer. That's awful. And it's going to flow its way through Target, through Walmart, through Amazon, and every other company that's looking to get as many sales as they can during the holiday season. I can't foresee retail having a great Black Friday compared to previous years.
Is it a want to or a need to, Bert? That's always the question here, guys. Again, this is a Dividend King. They've been increasing their dividend for so many years. It's insane. I mean, we're talking 50 plus years to achieve that status. They're a huge company, over 75 billion in market cap. Obviously, a lot of that has, come to 75 billion because of the tremendous stock price drop. Because, gosh, Bert, the 52-week high on Target stock is actually something to really make note of. The 52-week high was actually at 255. They're trading at 163.38. So they're down literally $90 in stock price.
And that's why they keep popping up on the radar here is when you see a stock price fall that much, especially when you own a stock like Lanny, you have to start taking a look to seeing, do I keep adding or do I wait a little bit longer until the prices come down?
Exactly. So, again, that's why Bert really is looking at this stock. Obviously, we know he buys another Dividend King. He did achieve the 100 shares of Johnson & Johnson. This is another Dividend King with a very similar dividend yield. So we're trying to see if it's time to buy this Dividend King. Is it time to buy this stock right now as you head into the holiday season? Is this a dividend stock to buy in December 2022? Bert, run them through the gauntlet, brother.
Yeah, we'll run it through our screener that focuses on 3 simple metrics. Everybody, PE ratio less than the S&P 500, payout ratio less than 60%, And then dividend growth history, we're going to talk about how long they've increased the dividend and that 5-year average rate. Then we'll talk about the yield right after. Again, Lanny, you called it. The prices are as of November 25th at the time of this video. You want to kick us off? You want to run us through that first metric here, Lanny?
Wouldn't mind if I do, Bert. So the price to earnings ratio, guys, which really looks at if the stock is undervalued versus the market versus the industry. Expected earnings right now is $5.52 for Target. They trade at $163. So that PE ratio is currently 29.6. Very high, very high, about 50% higher than the overall market.
Yeah, I mean, I have nothing more to do than this right now because that's not looking great for the. Do we want to add to Target? Let's talk about the payout ratio because this will be very important here, especially as they continue to work through some of these items. Annual dividend, $4.32. Divide that by the 552. That's a payout ratio of 78.26%. All right, let's see the other metrics, Lanny. Tell us about the dividend history.
Now, obviously, it's on the high side because, guys, they've had a very depressed earnings season this year. So just keep that in mind that more than likely it will be better beyond 2022, 2023. We would actually expect this to almost be cut in half on the payout ratio, more than likely double the earnings. So probably less than half on the PE ratio. But again, we're using the numbers that are available to us. Dividend growth has been amazing. 50 plus years, average dividend growth rate over 10.5% over the last 5 years for this Dividend King. So the dividend metric on the growth side is phenomenal. But the question is does that growth rate really speak to what they could do next year?
Yeah. Well, let's see where their yield stands. Their current dividend yield is 2.64% based on today's metrics. So again, not the best, not the worst, lower than some of the high yield savings accounts that are out there today, which are well over 3%. So let's summarize the metrics here before we have our discussion more about Target. PE 29.6, payout 78.26, 5-year dividend growth rate 10.55%, 50 years increasing the dividend with a yield of 2.64%, and the stock is down 30% year to date.
Down 30%. Bert, you own it in your portfolio. We own it in our portfolio. I think both my wife and I both have positions in our dividend stock portfolios right now. Pretty large and sizable positions, albeit they've definitely declined because of the stock price. But hey, when the stock price has gone down, the yield has gone up. So reinvestment has been really nice for us. Lately. I know in my portfolio alone, I have 124 shares of Target. So that's a pretty sizable position.
Yep. And for me, I'm pulling it up right now. We have 92.55 shares. So again, very sizable. That's why Lady and I are keeping a very close eye on this one. And we're going to be monitoring Target. Obviously, I don't think we are going to shock you when we say we're not adding to Target at these current metrics. No way you can justify it with what's going on right now.
Yeah, I know, Bert, if they dip below 150, which sounds like a big decline from 163, another 8% drop, would that catch your attention even more?
It would, and you hit on a key piece that we'll come back to here in one second, because the payout ratio is important at 78%. If I'm gonna add to it at 150, I gotta feel really good about the point that you mentioned earlier, that this is just a short-term blip and a short-term pop on the payout ratio, that earnings are going to rebound. If you look at Yahoo Finance and you look ahead to 2024, in our analysis, we use 552, which were average 2023 estimates. Next year, 2024 per Yahoo Finance is $9.65. So let me plug that into our stock screener here. Drops the PE ratio to 16.93, which is obviously a much more manageable payout ratio. That drops the payout ratio back into that 50%-ish range that you were talking about. Do you believe that they're going to get back to strong earnings that quickly, or do you believe that there's going to be a longer-term systemic issue impacting the industry? That's really the question to answer here. I want to see more results come out from the holiday season before I start nibbling in there, but if it drops to 150, maybe I'll add in 1 or 2 more shares. I'm also close to 100 shares. I'm at 92.559, so 8 would get me to 100, and this might be a good time to add if I believe that it's going to get to that 950, 960 earnings per share mark that Yahoo and their analysts are expecting.
Get to that 100 shares, brother. Guys, what are you doing with Target stock? Are you buying this Dividend King right now during this holiday season, during December of 2022? Do you think this is a dividend stock to buy right now or a stock for beginner investors? We want to know in the comments below.
If you haven't already, everybody, subscribe to that channel. Give this video a big old-fashioned thumbs up. Let's go, everybody. Let's get to financial freedom. That's what it's all about.
That is what it's all about, baby. That was Bertha, Hurt, and Lanny from the Dividend Diplomats, over and out.